I consider this the most important video that I've done yet because there is a major, have I said that enough? Pattern shift that is occurring right now, and that is a really big indicator, especially with all the problems in the banking system that we can't even see, but we will be seeing it, and I don't know when, but I don't think we have too much longer to go.
Hey everyone, brace yourselves. Today's topic is nothing short of shocking. Did you know that a 52-year-old market pattern has just been shattered? That's right. This monumental shift could have massive implications for the markets and, more importantly, your money. What does this mean for your financial future? Stay tuned as Lynette Zang breaks down the details and what you need to do to navigate these turbulent times. Don't miss a second of this most important video.
There is actually a major pattern shift that indicates the end of a 53-year-old trend. And why is that 53-year-old trend so important? Because it takes us all the way back to 1971 when we shifted from at least a quasi-gold-backed currency into a pure debt-based currency with the central banks controlling the debt and the interest rates. That is huge. Now, what are bonds? Okay, because this is gold's return in 50 years exceeds bonds. Now, of course, they're looking at it in yield, and that is really important. But what is a bond? A bond is debt. Why do you care about that? Because that's how money is created in this system. How is it supported? The full faith and credit of the government. So let's translate that. As long as you trust them, you have faith. Well, you will continue to loan them money, extend them credit. And this is showing you that that whole piece, the government's ability to support the currency by creating more debt, is gone. That's what this is showing you. That is huge. This is why I said the most important video that I've done here at Zang Enterprises yet, because you need to know it sooner than later. Now, from 1971, fiat money has been created from debt like I just showed you. A properly diversified portfolio, because all of those intangible assets are predicated on the value of this underlying currency, and that is shifted. It's not something that's that's what I keep saying. I mean, I've been talking about this for so many years, and people say, well, Lynette, you've been talking about it, and nothing has happened. That's not true. It's just happening beneath the surface where you can't see what's happening until it's too late. All those issues that brought down the financial system in 2008, they were just papered over, which actually makes what's happening that much worse because there's that much more debt that we have to deal with. This is a debt crisis. Let me just keep going on. Properly diversified portfolio contains tangible assets to offset the decline in intangible assets. Like we just saw, in Argentina and Venezuela, everywhere where they do those overnight resets, that has an impact on any of the assets, the intangible assets that you're holding. So we want to make sure that you are covered. That goes away? Okay, not a problem for you. Physical gold and silver, this is sound money. It is so critical for you to have a sound money strategy and portfolio along with the other pieces that can ensure or assure that you can retain and maintain a reasonable standard of living. Food, water, energy, security, barterability, which for me is primarily silver, though silver in any form, right? Food, water, energy, security, barterability, wealth preservation, community, and shelter. Get it done, get it done. That's what this is showing me. The safe haven of choice has become gold. Wow, isn't that interesting? Because guess what? That's been the safe haven of choice for thousands of years, and why you see central banks accumulating it the most and the fastest level in history since they started tracking it. Here's another thing to prove that the shift had occurred. The bond gold return ratio breaks a decades-long support line. How about going all the way back to the 70s again? Can you see this? Everything is full circle. I don't know why I'm basically the only one that talks about a currency life cycle, but everything has a life cycle. This is not rocket science. I do not look the same as my 9-year-old granddaughter looks. We are at the end of this huge experiment. And let me tell you, when we come to an end of something that has gone on for 100 years, it is violent. It is not a soft landing. That is garbage. And everything I've been showing you has been the breakdown in the banks beneath the surface that you can't see. There is crisis after crisis that is unfolding, but you don't know what that looks like. So, okay, just more of the same. No. This is not more of the same. This is a huge key pattern shift. And when do you want to know about these shifts? You want to know about them ASAP. So even though, so we've talked about this ad nauseum in the past, right? So typically the Fed raises interest rates, the spot gold contract drops, because after all, gold does not pay interest. Gold doesn't have to pay interest. It is the safest darn thing that you can do. You hold it, you own it outright. It runs no counterparty risk. It protects you from inflation. And this is your war chest. This is going into a battle with a bazooka. This is going into battle and, hey, guess what? Helping the other side. I don't want you to help the other side. I'm on your side. I want you to be on your own side by making sure that you have sound money. Because what we're looking, gold decouples from real yields, this is huge. All of these pattern shifts are around debt and sound money. What does that tell you? Who knows more about that than central banks? They know what they're doing. And what are they saying? We are in a structural bond bear market. Wait. We are in a structural bond bear market? A bear market is a negative market. Our money is created from bonds. So that means if the bonds are in a structural bear market, guess what else is in a structural bear market? How are you holding your wealth? Are you holding it in the stock market? Do you have ETFs? Do you have mutual funds? Do you have a 401k? Do you have an IRA that's in mutual funds or annuities or any of that other stuff? Because remember, if bonds are in a structural bear market, negative market, that means this stuff is too. I couldn't care less about this stuff. Do we have to work for it? Sure. And then you convert it as quickly as you can into this. We can have a quiet and peaceful revolution. Just turn that garbage into sound money. That's it. Simple. Easy peasy. Because no matter what bank you're talking about, this is from a new Bank for International Settlements report, the BIZ. The BIZ is the biggest, most important central bank in the world. So when I'm telling you about the qualities gold, where it runs no counterparty risk, it is a proven inflation hedge, gold held at home runs no political manipulation risk, and as a war chest, that all comes from the Bank for International Settlements. Those aren't my words, those are their words. And what they're saying now is, we know from experience that things look sustainable until suddenly they no longer work. Their words, not mine. That is how markets work. And so the Bank for International Settlements, the most important central banker in the world, because they are the central bank, is warning the world of a sovereign debt crisis, not just a corporate bond problem. But what is sovereign? Sovereign is government, a government bond issue. What else do they say? Beware market's sudden wrath over debt. Beware, because the markets can overwhelm the central bank's ability to bail anything out and to create, oh, I wish that would happen to them, it will, and to create this at will and devalue everything, all the rest of the money that's already out there. But what happens to this? This becomes more valuable. That's why they have to manipulate the spot market, because a rising gold price is an indication of a failing currency, and it really is that simple. And they had to create an alternative to this so that money could flow there instead of into physical. Don't be fooled. Whatever else you have, make sure you're properly diversified. You got to do whatever is you feel most comfortable doing. But for 6,000 years, this has been sound money.
Wow, what a revelation. If Lynette Zang's insights on the broken 52-year-old pattern blew your mind, smash that like button. Make sure to subscribe and ring that notification bell so you never miss our deep dives into critical financial trends. Got thoughts or questions? Drop them in the comments. We love hearing from you and sparking great discussions. Remember, staying informed is your best defense in uncertain times. Until next time, stay savvy and keep exploring the financial frontier.